Yali everyone. My name is Ali Shivji, and I am the Honorary Secretary for the Aga Khan Economic Planning Board for Canada. Thank you for joining today's webinar on emergency preparedness, natural disasters, and insurance. This is the second webinar in our two-part series on emergency preparedness, where we will explore the impact of natural disasters on business, risk mitigating strategies that business owners can leverage, insurance covering considerations, including coverage for business interruptions and periods of indemnity. We should also be mindful that natural disasters that we'll be speaking about today are events that will absolutely happen in Canada, and they will affect the Jamaat. Yes, I want to be very clear. The events that we'll be talking about today are going to be events that will happen. We just don't know when the timing of these will be and how they'll befall upon us, how they'll occur, and specifically how they'll affect us. But what we can do is help you become prepared. Today's session is about helping the Jamaat become prepared to make our businesses more resilient, not through just insurance, but through disaster continuity and planning, including how to think about our employees, our families, and in order to have businesses that will truly continue well into the future. With that in mind, we'll be providing context for natural disasters, both past, present, and future. Well, future in the context, we'll be talking about the ideas of them from the Insurance Bureau of Canada with an in-depth view from Erin Sutherland. We'll then walk through the largest and most severe natural disaster to befall in North America in this century, a Category 5 hurricane that hit New Orleans in 2005 called Katrina. That will reinforce what can happen in a catastrophic natural disaster, and what we need to be mindful of in terms of both severity and preparation. With a first-hand account by Placido Miceli of Hub International, this was a real-life event that will not only come close to what demonstrates what a serious earthquake off the coast of British Columbia will look like, but it also gives us a sense of what this devastation could mean and what it will mean in terms of rebuilding. Before I hand this over to our moderator, I think we should start by we should take into account the words of Charlie Munger, Warren Buffett's partner at Berkshire Hathaway, one of the largest insurers in the world. Charlie once said that regarding the probability of these events, a 1% chance means a 100% chance in 100 years. Something that may seem infinitesimal today becomes an absolute fact given time in the future. All the discussions today during the course of this webinar are the views and opinions of the speakers themselves and do not reflect the views of their employers, their affiliates, and the information today is purely meant as an informational only webinar. It doesn't constitute financial, legal, tax, investment recommendations or advice. Today, we are privileged to have a wonderful group of panelists. Our first panelist is Erin Sutherland. With experience in government relations, policy development, strategic communications, Erin has a demonstrated record of building, maintaining, and leveraging relationships to achieve mutual goals. As Vice President for the Insurance Bureau of Canada's Pacific region, Erin directs all of its government relations activities in British Columbia. He's responsible for eliciting positive change and sound public policy on key priorities and member companies' concerns on strategic property and casualty insurance industry and the objectives overall. Our next panelist and no stranger to the Smiley community is Dave McFarland. Dave has spent his career in commercial insurance and as a part-time kind of almost pseudo member of the Jamaat, both in sales and management, but today he works collaboratively for team members across Hub North America's footprint to find the most appropriate insurance solutions for both new and existing customers who have multi-jurisdictional risk across Canada, into the US and international. And for those of you who haven't got a chance to interact with Dave, he truly is one of the biggest friends of the Smiley community and someone who's been around and been helping us for many, many generations. I'm sure, well, I'd say many generations, or has the effect to many generations. Our final panelist is Placido Miceli. Placido is a risk consultant for the Hub Gulf South region and in Hub's specific risk services division. He has over 15 years of experiences in claims, safety, training, and risk mitigation. His position with Hub was directly preceded by his role as the New Orleans branch claims supervisor and then the risk control consultant for an insurer specializing in heavy industries, logging, forestry, construction, oil and gas. The Q&A session today will be moderated by Shakil Hirji, I'd say the legendary Shakil Hirji, the Global Coordinator for Focus Humanitarian Assistance. So before we forget, a little bit of housekeeping. Before we start, rather, a little bit of housekeeping. First, on the bottom right-hand side, you'll see a chat window where you can also ask questions. We encourage everyone to ask questions throughout the webinar so we can make this as interactive as possible, and that you make sure that you look on the right-hand side if there's any other questions, chats, or other things that come up that you want to ask questions about or be aware of. Now with that, I will turn it over to Aaron to start today's discussion. I hope you all enjoy the presentation today.
Thanks so much for that introduction. Can everyone, I think you should be able to see my screen now, but I'm Aaron Sutherland. I'm with the Insurance Bureau of Canada. So we are the National Association of Canada's home, auto, and business insurers, and we represent about 90% of the Canadian marketplace. And the conversation we're going to have today is a really important one, and it's one that the industry feels we've been a little bit of a canary in the coal mine on for some time now. Really trying to get Canadians to think more and more along the lines of exactly what Ali said, which is we need to start considering and thinking of disasters and emergencies as no longer a question of if they will occur, but when. We know these things are happening more and more often, and for the insurance industry, we have been tracking the incidents and impacts of severe weather events, and an increase in natural disasters as a result of our changing climate, going back to 1983. And whereas these events used to, and I should say, we track the financial cost of those events going back to 1983. And whereas the impacts of severe weather, storms, floods, wildfires, from a financial perspective, was really quite negligible for quite some time. We have seen, and as you can see, the cost of catastrophic losses in this country going nowhere but up, to the point that every year since 2009, natural disasters in this country have caused over $1 billion every year. And this year will be no exception. In fact, natural disasters so far this year have cost Canadian insurers $2.4 billion. And as those numbers go up and those financial losses mount, they are simply one indication of the overall human impact these events are having. The types of events we're talking about that we're seeing more and more are wildfires, like Fort McMurray back in 2016. That event alone caused $3.6 billion in insured losses, and we are still seeing seeing claims and the recovery efforts continue going on 5 years later from that event alone. We're also seeing an increase in severe storm, ice, and hail events. Just this past June, we had a severe hail event come through Alberta, through Calgary and the Airdrie region. Likely, if you don't live in Alberta, you may have never heard of this event because we were getting so used to seeing this type of thing. But that one hail event alone caused $1.2 billion in damages in insured losses. And it's an indication of the fact that these things are simply happening more and more often, and really demonstrates the importance of having financial preparedness being a piece of your overall preparedness package or your bundle. And the last one I just want to draw attention to that we're seeing much more of from an insured standpoint is the incidence of flood. We know there are over 1 million homes in Canada that are at high risk of flood. That number is only growing, again, as our climate changes, as we see more incidents of extreme rainfall events with more water coming down over a shorter period of time and overwhelming either our municipal infrastructure or overwhelming our waterways and spilling over onto Canadian properties and onto Canadian businesses and having an extremely damaging effect. Water damage has replaced fire as the #1 cause of insured losses here in Canada. And again, it's something we take very seriously and something we're calling on all Canadians to better prepare for going forward. When we look at the 10 most expensive natural disasters in this country, 7 have come in the last 10 years, which again is just another indication that not only is the frequency of these types of events increasing, but the severity of them is as well. And it isn't any one single type. It isn't that we're just seeing more wildfires. It isn't that we're just seeing more severe storms or more severe floods. We're seeing an increase in all of these things. Again, as our climate changes and as these weather events are on the rise. And so, we know the cost of these have been increasing. But I also know there's folks on the line from Vancouver and from the Montreal-Ottawa corridor. And when we think of floods and we think of wildfires and the impact those have had, all of that would pale in comparison to the devastation that would be wrought were we to see a significant earthquake in either one of those regions off the coast of Vancouver or off the coast of British Columbia, I should say, or in the Montreal-Ottawa corridor. We've done some recent research that tells us that the damage from those type of events will be measured in the impacts of tens of billions of dollars. And when we look at earthquakes around the world, in places like Japan, New Zealand, we know that when earthquake strikes, the recovery from those events takes a very, very long time. The human toll is extensive, and that financial recovery is extremely difficult. Where insurance is lacking and where you don't have the financial backstop that insurance can provide. So it's just yet another piece we encourage homeowners and businesses to be mindful of and be thinking about when they're purchasing their insurance policy. I say all of this not to try to alarm anyone, not to try to scare anyone, but to tell everyone the best thing you can do is be informed. Work with your insurance representative to make sure that you have the right coverage in place for your needs, and that you've taken the time to think about the risks around you, the risks facing your business, and have thought about what you can do to better protect yourselves and make sure you're able to financially withstand what is to come. Because again, it's a question of when, not if. And I'll just quickly touch on 2 trends going on in the market today. As a result of the increase in claims that I've been talking about and those increase in severe losses, there has been pressure on the industry and pressure on rates. And if you have renewed your business insurance policy recently, you may have witnessed this. It is a challenge. And again, it's just yet more evidence of the importance of working with your insurance representative, your broker, to make sure you have the right coverage at the right price. With the increase in emergencies, one thing that's really important to consider is business interruption insurance. This can often be separate from your standard business insurance policy, and this covers losses for a business when it's unable to operate due to an insured event, something like a fire or a flood. Now, I do have one caveat that I want to say, that business interruption insurance typically is limited to perils that cause physical damage. The business itself typically has to be damaged for this type of insurance to kick into play. So with regards to COVID-19 and the pandemic we've been challenged with more recently, typically business interruption does not cover that type of event unless it's been specifically sought out. Happy to talk a bit more about the why and the intricacies of that if you folks have questions as we continue. And just thinking about COVID-19, this pandemic has challenged all of us as a society. It has brought about enormous health and economic consequences, and the insurance industry is certainly not immune to that. It has amplified some of the challenges I've talked about to date, both from a risk perspective and also from just an insurer financial perspective and from a business financial perspective. And so it is very top of mind for the industry as we go through this, that we're doing all that we can to support businesses facing challenges from COVID-19 and really wanting to work with our commercial clients to make sure they have the coverage that they need. So if you're having challenges with insurance, or if you've got questions, again, I'd encourage all of you, first and foremost, work with your insurance representative, whether that's a broker or insurer directly. work with them to develop a robust risk management strategy. But if you're unsure where to start, you don't know what to do, you just have some questions you'd like answered, my organization, we can provide that on unvarnished, unbiased advice. We've got insurance representatives at the ready on our business insurance hotline. We can be reached at 1-844-2-ASK-IBC, and you can see the number on your screen in front of you. We're not an insurance company. We're not going to sell anything, but if you've got questions, if you've got concerns, we're here to help. We work on behalf of the industry to break down some of those barriers and work with customers to make sure they're getting the support that they need. So again, thank you so much for having me today. Looking forward to the conversation, and I'll turn it back over to Ali to introduce our next presenter.
Thank you so much, Aaron. Really appreciate that. Good afternoon. I'd like to thank the Shia Amami Ismaili community, His Highness Aga Khan, and the Insurance Bureau of Canada for hosting this. Hurricane Katrina was the last natural disaster to occur in North America of this magnitude. The damage area, cost, loss of life, and change in the fundamental management of disaster response was born from this event. On October 29, 2005, my world, like so many others around me, was changed forever. The once-in-a-100-year storm landed on our doorstep, Hurricane Katrina. My discussion today will be from first-hand accounts of myself and Matt Zubich, another risk consultant here in Hub Gulf South. Most of the photos in this presentation are from our own personal photo albums. Growing up on the Gulf Coast, we have all heard the stories from our parents and our grandparents about the hurricane that cleared the lands of all that stood in its way. They talked about what it was like before Hurricane Camille or Hurricane Betsy, how the landscape changed after those storms. When discussing Katrina, we affectionately refer to anything before the hurricane as pre-K or pre-Katrina. From June 1 to November 30th, every year we are resigned to the knowledge that there will be a hurricane. We don't know if it will be our time to be hit by the storm or if it will be our friends or our families in another state, but we know it will come, and the steps are always the same. You prepare for the storm will arrive, you will recover. Every year, without fail, this is what we do. On Friday, August 25th, 2005, I was living in Slidell, Louisiana. We're a suburban community about 30 miles east of New Orleans. It was myself, my wife, my 3-year-old daughter, 3 dogs, and 2 cats. We thought this was going to be just another hurricane and we'll be fine. Until you understand what hazards may present themselves, you'll never be prepared. But being prepared and maintaining preparedness are 2 different things. So what is a hurricane? How do you classify it? The U.S. uses a scale with 5 categories of storms. Us, like many families, took the approach that anything below a Category 3, winds less than 178 kilometers per hour, would be fine to stay for. We could weather that storm. Category 3 and higher storms were judged by where they would make landfall. Are they coming directly for our house, or were we on what's called the cone of uncertainty? By the time that you think that you'll need supplies, it's too late. I've learned from Katrina to be better prepared, much better. Food, water, first aid kit. You may think that you can evacuate and take a break at a gas station, but so did 500,000 other people. What would you want to have with you if you were on the side of the road for 72 hours? We weren't going to leave, and the storm didn't look so bad. I was a paralegal in New Orleans, and my wife worked for a software company. We both left work early that day so we could prepare to wait out the storm. It was bigger than we anticipated, larger than projected. It was not what we had prepared for. The storm was projected to hit us on Monday. We stayed up all night Saturday watching the news. Waking up Sunday morning, we realized we had to leave. This was a super catastrophe. There was no staying. Where do you go? If you're on a coast, you're limited. We tried to go to a friend's house in Mississippi, but they had left to try to find a place to stay in Florida. So that's where we went. They had a small hotel room and a few families, so I slept in the SUV. We returned to our house Tuesday morning, the day after the storm. We couldn't stay there. There was a lot of damage, no power, no access to anything. So off to Texas until our return home about 3 months later. I grew up on the Mississippi Gulf Coast. I didn't think as I passed the businesses, casinos, hotels, and houses that they would be gone in a day. Nothing. All gone. Everything had changed. not just for now, but for years to come. Now, how do you recover from something so damaging? The world was cut off for months. I traveled back and forth from Texas weekly. My law firm closed. My wife's office never reopened. On a personal level, everything changed. After about a year, I transitioned from a paralegal to a property and casualty adjuster with a large global third-party administrator. I was back to seeing the brunt of the damage, but this time from an employer's point of view, a different perspective. I knew what it meant to have my family lost, but I didn't know what it was like to have an employer loss. The damages didn't stop after a year. I noted the same recurring themes that employers were having. It didn't matter if it was a mom and pop grocery store, a large construction company, or a landlord with 50 properties. It was usually the same issues. One, they had no staff. Their employees left and they had no way to communicate with them. The ones that did return usually told the story of how they initially felt abandoned by their employer due to lack of communication. And although this was in 2005, we had email, texting, and web forms. In a disaster of this magnitude, they are overwhelmed. The infrastructure is down and what remains is overloaded. Two, they had planned to reopen but didn't look towards how the rest of the world around them may not. Supply chains, internal communications, different platforms, sales, booking, etc., and increased costs passed from their vendors made some businesses untenable. They didn't change their safety, insurance, or HR protocols to deal with the period of recovery. For example, with the lack of employees, many turned to temp agencies or workers that were not legally permitted to work in the US. In a rush to fill those positions, they had increased GL claims, didn't think about the indemnity clauses with the temp agencies, and due to the government being very active after Katrina, there's increased scrutiny resulting in fines. 4, security. Theft was rampant. There weren't enough police, there wasn't enough security. Every dollar lost due to theft was even more impactful because it was more difficult to replace. There was an increased cost due to limited availability, and owners were concerned that their carriers would drop them with another claim. The time to debate whether you need to work on your organizational resilience has long passed. Whether it's man-made, natural, or economic, a disaster is a disaster. Your proactive efforts now will allow your reactive efforts after the disaster help guide your business. As this chart shows, in 2017, the U.S. Federal Emergency Management Agency noted that more than 40% of businesses never reopen after a disaster. And of those that do, only 29% were operating after 2 years. But Placido, here in the United States, Canada doesn't have that many disasters to really worry about. That's where you're wrong. Public Safety Canada keeps a Canadian disaster database. This database contains events where 10 or more people were killed, there was a significant event, damage, or interruption of normal processes that the community cannot recover on its own, as well as other metrics. Most people don't worry about an event until there's an immediate threat. An owner-operator may think that brush fire is hundreds of miles away. We're so busy with bookings this holiday season, I'm more focused on that. Wait, did it just jump a fire line and cut off the Trans-Canada Highway? From BC to Quebec, wildfires will continue. Straight line winds, hail, winter storms, tornadoes, it doesn't matter. I'm actually repairing my roof right now from Hurricane Zeta that occurred at the end of hurricane season. Were you aware that a hailstorm in June 2020 was one of Canada's costliest thunderstorm-related weather events with an economic impact of almost 1.7 billion Canadian dollars? Building business resilience isn't easy. It's a deep dive into all aspects of your organization. Your planning will determine how you act during an event. We call it working the left of loss. The trajectory of the crisis begins well before the event occurs. Methodical planning, identifying the hazards, development of the plans, implementing them, and then having real, actionable feedback for process improvement. That way, when the crisis occurs, you're not frenzied. You know how to provide effective leadership to your staff, your patrons, and your insurance carriers. And as someone that was a claims supervisor for a large property insurer, I found that claims flowed faster and more equitably when the insured had those processes in place. It may be a day, or a week, or a month, or a year, or a decade. 15 years later, some areas have yet to recover fully, and some are just abandoned. Lieutenant General Russell Honoré was in charge of Joint Task Force Katrina the overall US government response to Katrina. He told a simple yet profound quote: "People need to be cautious because anything built by man can be destroyed by Mother Nature." Thank you for allowing me to present to you today. I hope that this information was helpful in you guiding your organizational resilience plans.
So I'm Dave McFarland, Hub International. Thank you so much for having me here today. And Aaron and Cito, thank you so much for setting context. And really, when we discussed this in putting together this webinar, the biggest focus that we can say is the preparedness and understanding, as Ali said and as Aaron said, these events will happen. Insurance is only a small piece of this. We can't overemphasize the importance of being prepared, having plans in place, focusing on the resilience of your business and what that will look like for the future. And insurance is simply a funding mechanism to pay for those expenses. We would be very surprised if you did not already carry earthquake and flood insurance on your policies. Many people in the businesses in the Jamaat are involved in real estate. Typically, your banks will not lend funds unless you have earthquake, unless you have flood insurance. So it's still worth checking your policies to make sure you have those things, but we would fully expect you to have earthquake and flood coverage. One of the things you might not be aware of, but we want to bring to your attention as well, is relation to wind. For our Canadian policies, we typically have full wind coverage. But if you do have properties in the United States of America, you will want to check them to make sure that they do have wind cover. For a client we placed recently on their existing policies that were placed in Canada, their policies actually excluded the peril of wind, or I would rather say excluded a named storm. So we were able to identify and rectify that. And it's not uncommon when we do have to place wind coverage in the US, especially for customers with exposures in the Southeast. Sometimes those premiums are equivalent to what their overall insurance program is. It can be significant. In terms of the emphasis on what we'd like you to pay attention to is insurance to value. We can't overemphasize that, not just for these catastrophic risks, really, but for any losses. One of the biggest challenges we see over and over again is that people do not insure to value. They want to save a few dollars on their insurance today, but that can cost hundreds of thousands, if not millions of dollars after a real loss. Also to note, and we do know this happens after a major catastrophic event, the cost of repairs go up. Is a shortage of labor costs go up, shortage of building materials, those costs go up. And we know that we will be faced with claims inflation if, or when we actually do see that earthquake off of the coast of British Columbia or in that Montreal-Ottawa corridor. So that's something to be mindful of as well. And then finally, on the period of indemnity for your business interruption, even without a catastrophic event, it is not uncommon to see losses take up to 2 years, if not longer, to recover from. I just finished off a $25 million loss, and it took approximately 3 years to get through that, and that was only a partial loss. As Placido alluded to, in coming out of Hurricane Katrina, there are still some portions or places in the state of Louisiana that have not fully recovered. So we would encourage you to look at the period of indemnity in relation to your business interruption insurance and look at longer periods of indemnity, upwards of 36 months. You may even consider longer periods. Finally, as it relates to some different options that you might consider, insurance deductibles for earthquake and flood continue to increase. Speak to your insurance broker about the possibility of buying down those earthquake deductibles. Likewise, in the flood space, you do see some innovation happening with something called parametric coverage, where insurers are now offering coverage based upon the level of water. So if one wanted to, they could buy insurance if they had a foot of water that would enter their commercial building, let's say, and it would be one price versus if they were willing to take on more risk and willing to have waters that were 3 feet high, it would be a different price or a lower price. And in those cases, the providers in question actually put meters into the premises to determine when the trigger has occurred, and then they pay a lump sum of cash. So it wouldn't be traditional insurance that would adjudicate, etc. They simply pay a lump sum of cash once that parameter is achieved. Finally, what we see already in areas where earthquakes occur on a frequent basis is where insurance has become so expensive that customers only buy earthquake, flood, and hail on what is called a modeled basis. So realistically, most of you right now are probably buying earthquake and flood for the full limits of your policy. But in the future, as these expenses continue to go up, we expect from an insurance perspective, you may only be buying sublimits for and your insurance broker would be modeling your particular building to determine how much earthquake insurance you should probably buy based upon the model event, just to keep expenses in line. So with that, thank you very much for the opportunity here. We definitely look forward to your questions. And I am pleased to transition over to Shakil Hirji, the Global Coordinator of Focus Humanitarian Assistance Canada. And Shakil, if I could also ask you to maybe talk about a bit of Focus and what you have looked at for modeling on risk and some of those events as well. So thank you very much.
Thank you, Dave. Wanted to sort of start off by thanking Dave Placido and Aaron for a wonderful presentation. I think that you brought the audience to some places where I think we had not been before, and I think that it was wonderful. I wanted to sort of just quickly summarize first of all, and Dave, thank you, just about Focus a little bit. Thank you. Since you've given me the platform, I'll use it. Focus, as you know, is a humanitarian assistance organization that has been around for now a little bit over 25 years. We work globally, but very closely with the Jamaat and the national councils across the world in 3 main areas of disaster emergency preparedness. We do response in the aftermath of a disaster, and we are heavily involved also in looking for durable solutions for those that get forcibly displaced. Our concern over the Jamaat and the work that we're doing in Canada has primarily been around being prepared for emergencies, to build a resilient community, and we have heard that word a lot in today's presentation. When a disaster happens, there are 3 sort of areas that get impacted a lot. Obviously, one is on people's property. Second is obviously on the people themselves, loss of life or injury. And then the third is the livelihoods. And specifically today, we heard from you about how to ensure that you can protect your businesses and how you can make sure that your businesses are resilient to disasters. And I think that's an important aspect that the Jamaat, I think, is quite appreciative of hearing about. If I could summarize a little bit about what we heard from the panel today, and then we'll get into the questions. I think that the message was very loud and clear, that it is not a matter of if, but a matter of when. And whether it's south of the border or right here in Canada, we are not immune to disasters. They continue to happen they're happening more frequently, and they are more ferocious than they were, even 10 years ago. A few sort of points to take away that I thought were interesting in this area, that 7 of the 10 most expensive disasters have happened in the last 10 years. I think that's a very sort of alarming sign as we go forward. I think that the idea around the fact that Katrina really sort of changed, and was fundamental changes that came after it in terms of how we prepare for emergencies and how we create our resiliency, I guess, if I can put it that way. And I think one of the lines, Placido, that really sort of caught my my attention was this whole area of not just being prepared, but maintaining that preparedness. And I think a lot of times we prepare and then we think, well, it's over now, so we can relax. But I think the idea about maintaining the preparedness is an important aspect of what you brought up. And I thought this really alarming sort of statistic of saying that 40% of businesses don't reopen or after a disaster, I think, and then the 28% of them don't continue on beyond 2 years. So that's 68% of businesses that essentially in a 2-year span after a disaster do not carry on. It further sort of emphasizes the need for us to be able to be better prepared. And Dave, your comments about sort of understanding catastrophic risks and what we have to do to prepare for that, I thought was an interesting aspect that people need to understand. So thank you for sharing all of that. I know that as Ali sort of said right at the onset, we're sharing this information, sharing this knowledge with the participants, but every business, every individual has to sort of look and speak to their own brokers or their insurance providers to understand better how they can get the right kind of risk management for their own particular businesses and lives. So with that, I thought we could open up for some questions. The audience has been sort of piling in questions as we speak, so I will start off with the first one. The first question we have here is, what conditions in a policy could nullify a claim? And sort of a follow-up to that would be that the procedure and time after a disaster for validation and approval. How long does it take after a disaster for validation and approval to take place? Aaron, are you going to take that on?
Sure. So, and I'll look to Dave and Placido to fill in any other pieces. I think this kind of speaks to what I think is an unfortunate public sentiment around insurers, that we're always looking for some way to get out of paying a policy, when in fact I actually think any insurer that does that is going to run out of customers pretty quickly. And so insurers are actually here to help in your time of need, but the policy wordings and what you have purchased as it relates to your insurance is important. It's important to know and to think today about what you're covered for, and to spend the time it takes to make sure you've assessed the risk around you and have the appropriate coverage. I think about how much time, and maybe it's just me, but I think it's a lot of us, spend thinking about our, the next flat screen TV we're going to buy, or the next smartphone we're going to get. But when it comes to insurance, it's something we really just want to spend as little time on as possible and move away from, when that's the exact opposite approach we should be taking, because insurance is often covering the most important aspect of our lives, whether it's our home or our business, which is our livelihood. And so it's not, the conditions that could nullify a claim really are only if you haven't purchased protection from that peril. But if you're talking about a flood, water damage, fire, earthquake coverage, so those are typically included in a business policy, and so you'll typically have those. The only way a fire wouldn't be covered is if you started it yourself deliberately. Otherwise, you'll have coverage for like that, and unless flood specifically excluded in your policy, which it can be, but it's not the norm, you'll have coverage for that as well. And then the time it takes, typically policies can have about a 2-year time period when they want to see the claim largely wrapped up. But it's not a guideline because it is clear in the policy saying that. But as long as that's really in there to make sure that clients are working with their insurers to show progress that they are working to resolve a claim. We do recognize that when disaster strikes, some of us, it's very difficult for us to deal with. We freeze up. And insurers, they're there to work with you. They are compassionate. They do understand the challenges you face, but at some point they do need to work with you to begin to rebuild. And so, whether there's a limit in your policy or not, if you are showing progress, if you are working towards that, they will work with you and show flexibility there. And as Placido said, and as we've seen around the world, when you see these major disasters strike, it can take a very long time for a full recovery to take place. And that's where insurers are really trying to show that flexibility as well. When I think about things like an earthquake, I think about the earthquake that struck Christchurch, New Zealand, back in 2013, and the fact that there's still many areas of that community that are still being rebuilt today. And so that really shows that, you know, a lot of that's being paid for through insurance, and it simply takes time. When you have a whole community taken out, it can take a long time to put back together. Sorry, long answer. But anything to fill in, Dave or Placido?
Placido, can you just speak to I mean, you were on the ground adjudicating claims and what your experiences were with insurers and payouts, if you don't mind?
Yeah, I mean, kind of what Aaron talked about. Everybody, when I sat on the insurance desk and then moved up to supervisor, a lot of people think that the insurance companies are the bad guy. I'm speaking for the U.S. As a carrier, I'm terrified of a bad faith claim. I'm going to take care of you, one, because that's my obligation as a carrier, but two, I also don't want to get in trouble. So you have almost a rubber band effect for large catastrophic losses. In the very beginning, the insurance carrier, once it lands on their desk, they want to remove it from their desk. They want to go ahead and pay you the claim, and a lot of times they'll pay you a little bit more. But then you sort of see that money shrink up after about 6 months. It starts getting smaller and smaller, because what the carrier did was give you a start, and they gave you a little bit of money to start prepping your business. But then contractors start coming in, bills start coming in, and it starts taking a longer time for all that to recover. So that's why you see in the beginning, 40% of businesses will never recover because they don't have the proper coverages, or they just can't afford their deductible. And then you see that 2 year later period, that's that rubber band effect. They worked off of how much money the carrier could give them, but they can no longer sustain it. So when you think about this organizational resilience that you have, you don't want to look for just that instance. If you have good placement of your coverages, when it lands on my desk, I'm going to take care of you. I'm going to write those checks. I'm going to get your BI check out to you, your business interruption. I'm going to take care of you. A year later, that's when it starts closing in. So you want to make sure you have some reserves, some capital set back. So and I can't speak to what you may need, but you want to be able to have that to insulate yourself, a little bit of a buffer between what the carrier is going to give you now and later. Again, and I speak towards only America, you never want to prejudice your carrier. Let your carrier know what's going on. You have damage, photograph and get it to them. That's the biggest problem that carriers see, is when you prejudice them. You had a large loss, but you didn't report it for 8 months, 9 months. You thought you could handle it on your own. It's a little bit late then. And Katrina, Rita, all these other storms fundamentally changed insurance. And you're talking about in Canada, they have to pay X amount in a certain amount of time, or they have to pay in a certain amount of time. In Louisiana, within 30 days of proof of loss, a carrier had to make that payment. They've extended it now because of Katrina. They said there's no way. We are penalizing these carriers for not being able to pay billions of dollars within 30 days. So they extended it to 60 to 90. So you have a loss. Remember, that carrier has finite capital and they have finite boots on the ground to be able to help you. Part of doing this is helping yourself, having that organizational resilience plan out there. Again, like Aaron, it's kind of a long story to get to that.
Thank you, Placido. Dave, anything to add?
No, I think these gentlemen have done a great job covering that off. So,
great.
Right.
Dave, you will cover this in your presentation, but there was a question, and I thought maybe perhaps a few more lines on this from you would be useful. And the question is around, what should we look for in our coverage in order to be sort of better prepared for natural disasters, floods, even sewer backup, for example? Would you just touch on that a little bit, some more?
Yeah, sure. The biggest challenges that I see, and I've been doing this for 31 years, is underinsurance. I have yet to be through a claim where I had a customer complaining at the end of the day that we had too much insurance. Usually the limits are used up, whether that's on business interruption or the property line, the large $26 million loss I alluded to. 24 months came and went on that. On a portion of that, for the building owner, he had 36 months period of indemnity on the rental income, and it was we use that number up as well. So make sure the period of indemnities are reflective, even for this day to day, regardless of catastrophe, because municipalities take time to issue building permits, and what after an insured loss, like you've got so many different investigators in there. Everyone wants their piece of flesh, and sure, if you're going out and developing a piece of building or a piece of land on your own today, and you're able to push and push, but you might not even, after an insurance loss, you might not even get access to the land for 6 months afterwards if there's a fire investigation that is part of that as well. So I can't overemphasize insurance to value and periods of indemnity on business income. Those are the big mistakes and challenges. And your insurance broker can't do anything afterwards if you're not insured to value, and they can't change the period of indemnity on business interruption afterwards either.
I wouldn't mind speaking to that.
Jen,
Yes, please.
We've had an unprecedented hurricane season in 2020 in New Orleans. There's another one out there, and it's crazy. So when you look at your commercial building and you've got a replacement cost on it for $4 million, because if it gets totally destroyed, right now, the cost of lumber has doubled. That has to be borne by somebody. And if you have X amount of money on your policy and there's a catastrophe across a wide swath, hundreds and hundreds of miles, there's only X amount of dollars. You only get 3/4 of a building built for that dollar. So like Dave said, recognizing those limits is very important.
Good point. Good point.
A question sort of to build on that was one of our members of the audience was wondering about those that are exporters and what should they be looking for in terms of insurance, in terms of natural disasters if you are in the export business. Any
Aaron,
thoughts, Dave?
That one, or do you want to take that one?
I would say the best thing an exporter, talk to the broker. What do you think, Dave?
But an exporter, well, the two things you're concerned about is who you're selling to and where they're located, as well as your suppliers and where you're getting your goods from in the first place. So there's something called contingent business interruption. That's can be tough to get at times, though. So on the export side, where are your customers located? Are they located in earthquake zones or fire zones? Is there any way for you to purchase some sort of contingent business interruption to protect you in the event that those customers could not take delivery because they've had some sort of insurance related event? Likewise, if you're having your goods manufactured elsewhere, can you buy some sort of contingent coverage to protect you if your goods can't be delivered to you or because the factory has burnt down? So those are the things that come to mind initially. Obviously, there's always special circumstances and unique circumstances depending on what your specific business is. And the other thing I think about on exporting is as well is your credit risk, and there's certainly a number of different organizations out there from EDC to AIG to Coface, et cetera, that can help protect your credit risk as well when you're selling those goods and services on an exported basis. Hopefully that answers the question.
Yeah. With a few minutes that are still remaining, I'm going to take the liberty of asking each of you to comment on something. And I think it's a good way to summarize it. If there's often people that will ask you, well, what did I miss, right? So I'm going to ask each one of you to sort of give us one idea. If people were to take away from this, one idea each, one lesson that we can take away from everything you have talked about today in terms of sort of securing and business continuity, what would you share with our audience? Maybe you'll start with Placido first, Aaron, and then Dave.
All right.
Sorry to put you on the spot. It was not one idea.
The one thing I would say is keep it simple. Everybody wants to go in the weeds with policies and procedures when but when an emergency happens, you're not going to have time to delve 500 pages deep into something. Simple and concise that your leadership can read and that your lower management, your line managers can disseminate upon everybody. Just keep it simple. That's the best thing I think that you need to take away from this.
Thank you. Aaron.
To dive into those weeds. No, I think I'll give two if I could, just from a policy perspective. And I think if you're on this call, you're probably ahead of the game here. But take the time to think about what you're covered for, the risks around you, and make sure you're spending the time on your insurance policy that it likely deserves, because it is protecting the most important financial aspect of your life. And then just from a claims perspective, and Placido alluded to this earlier, claims can be very challenging. You can forget what you have, what you didn't, what you lost, what you didn't, especially as time goes on. But we all these days have cameras on our cell phones, and so if you do have a claim event, the best thing I could say is start taking photos of the damage, take photos of the things that you've lost. That will really help you and help jog your memory, and again, help make your case to your insurer to make sure you're getting everything you're entitled to. So take time and then take photos.
Thank you, Aaron. Dave.
Actually, the one thing I'd like to hear more of, and I think it's important, is just, Placido, can you talk about our business owners today and what they should be thinking about in relation to their employees? I think that's some of the most important information that we can have people take away today, if you don't mind.
Yeah, that everybody, every friend I have, family, everybody, the person that helped me build this PowerPoint presentation, Matt Zubich, he lived further south. Where he grew up was wiped out. A lot of those pictures that you saw were of his neighbors. So when you have thousands of employees, whether you're a big business, small business, when they're all displaced, you need to have a centralized way for them to communicate. They want to be grounded. They need to know that they're dealing with their carrier, they're dealing with their friends. Money is so important to them, especially in the time of need right now when they're evacuating or leaving. That communication with your employer, making your employee feel wanted and needed, that your employer cares about you in a time of crisis. Get an 800 number. Get little cards that have an 800 number on there. That way, when something happens, a major event, they can reach out to you. They'll want to know the status of their job. They will. They'll want to know what's going on. They may not be able to get a hold of anybody, but if they can get a hold of you, they can talk. That mental toll when they're going around and they don't have anybody to communicate. You need to keep your capital. Your best capital is your people. Make them know that you want them and you need them. That's what I think they should do.
Thank you. So this was a good way of Dave to slough off his comment onto you, Placido. So let's hold him to account and see if he has something to add.
Insurance is just a funding mechanism. I mean, Aaron covered it off well. I mean, I've said it. Insurance to value. I'm risk averse. Like you've got to make sure that you're insured to value. Don't look to save a few dollars. Like as we've alluded to, I mean, claims inflation's real. I mean, Aaron's seen that. Placido's seen that when we have big catastrophes. So make sure that you're insured to at least replacement cost, and maybe you add a margin of error. Same with your business interruption. But the big thing for me is just that preparedness. And Placido, thank you so much for being here today and speaking about that, and people thinking about resiliency and what do they need to do in terms of a business continuity plan. Like I would encourage you to really explore that today if you've taken the time to listen to this podcast or webcast, and if you're listening to it afterwards. Those are the things that you really need to think about and that are going to make a difference in the future. And Shaquille, I know that's a huge part of what you're doing at Focus Humanitarian Assistance as well.
Thank you, David. You're absolutely right. And I was just, my last thoughts on this to share with the audience really is, and Placido, you sort of showed these two slides on the different disasters across Canada as an example. And I think we all sort of came to that it's important for individuals, businesses, people to understand the risks in the locales in which they're operating or living, because I think that's the first step, isn't it, to start thinking about what you need to do to be better prepared for it. So thank you for sharing that and putting that website on there as well. We'll make sure that that gets communicated to the audience as well, that this is the place where you can go and understand at the municipality level sort of what risks you're facing. And I think that was an important message. So thank you for sharing that as well. This kind of brings us to, sorry, go ahead, David. Yeah.
I just want to also personally thank Aaron and Placido. You guys both did this as a favor. I greatly appreciate the time and effort that you've spent in putting together today's presentation. So it is greatly appreciated. And I just want to acknowledge you guys for the effort you put in. Thank you.
Well, with that, I will say special on behalf of the Aga Khan Economic Planning Board, Council for Canada, as well as Focus Humanitarian Assistance Canada. Thanks so much, Dave, Aaron, and Placido, for taking the time and spending this hour with us. I thought what you shared is extremely invaluable and very, very useful for us. And so thank you for that. And I get a feeling that we'll be touching base with you again to do a part 2 of this. So, gentlemen, thank you for joining us. And with that, we'll bring this to an end. Good night.
Thank you, Shakito.
Thank you.
Thanks. Bye-bye.